Welcome back to the deep dive. Today, we're going to tackle IndiGo's second quarter. They've had quite a ride, and we're going to figure out just what happened. You've given us a ton of information company filings and earnings presentation, even a bit from their earnings call, and we're going to try to break it all down.
What's interesting here is Indigo is publicly traded, so everything's out in the open.
Correct.
We have both their consolidated financials, including their subsidiaries, and their standalone numbers. And it's all been looked at by internal and external auditors, so we know we're getting the real story.
So no funny business with the numbers then. Let's jump into it. How did they actually do?
Well, their capacity, or ASKs, grew by 8% year over year, which is what they predicted, and their total income jumped by 14.6%, reaching 178 billion rupees. So at first glance, things seem pretty good.
Yeah, that does sound promising. But I have a feeling there's more to this.
You're right. Despite those positive numbers, they reported a net loss of 9.9 billion rupees. And this comes after a profitable quarter last year. So what gives?
Yeah, clearly something changed. Did their leadership say anything about that?
The Indigo basically faced a perfect storm this quarter. One of the biggest things was a global supply chain issue. That really hurt the availability of aircraft engines.
Yeah, I'd heard rumblings about this. How bad did it get for IndiGo?
It led to a record number of grounded planes for them. It peaked in the mid-70s in Q2, and their total fleet was 410 at the end of the quarter. So that's a lot of planes.
Wow, that's a huge hit. How did they keep things going with so many planes down?
They had to get creative. They secured short-term leases to fill the gaps. Of course, those are more expensive. It's kind of like patching a leaky roof in the middle of a storm. You're doing what you have to, but it's going to cost you.
Yeah, I can see how that would hurt their profits. Were there any other factors contributing to this loss?
Yeah, unfortunately. Fuel costs spiked compared to the previous year. That's because of an increase in VAT in some states. And then there's inflation, which affects everything, like airport charges and even hotel rates for their crews.
So a combination of internal and external pressures really squeezing them. But amidst all these challenges, there has to be some good news, right?
Absolutely. It wasn't all bad news. IndiGo hit a major milestone this quarter. They became the first Indian airline to operate a fleet of over 400 aircraft.
Okay, no, that is impressive, especially with all the engine issues.
It shows their commitment to growth. And they didn't just focus on the fleet. They also launched a brand new business class product. They're targeting seasoned business travelers, but also those looking to experience some luxury for the first time.
Smart move. Appealing to a wider range of travelers is key these days. Did they do anything else to improve the customer experience?
Yeah, they totally revamped their loyalty program. They're calling it Blue Chip. It has really good rewards and even lifetime validity, which is a great way to keep frequent flyers happy.
It sounds like they're trying to build a loyal customer base, which is smart for the long term. What about other strategic shifts?
One key area is digital. They're really investing in their website and app. They've redesigned both and added things like a fare calendar. The goal is to get more direct bookings, which could boost revenue.
Makes sense. Streamlining the booking process for travelers. With the engine troubles, did their international plans take a hit?
Not at all. They actually kept going. They added Jaffna in Sri Lanka and the Maldives. And they're not done. They're looking at expanding in Malaysia, too, places like Penang and Lanari. Their goal is to reach 30% capacity share in international markets.
That's ambitious, but possible, I think. Especially with how much Indians are traveling these days, so they're really thinking long term. What about investing in their people?
They're not just adding planes and routes. They're also focused on their workforce. They partnered with some top-notch aviation academies to train new pilots. Through their cadet pilot program, they even opened new training centers, increasing their training capacity by a whopping 60%.
It sounds like they're building a pipeline of skilled people to support that growth. IndiGo is definitely playing the long game here.
And they're not sticking to just the traditional airline model either. They've launched IndiGo Ventures, their venture capital arm.
Hold on, an airline with a venture capital arm, that's not something you hear every day. What's the strategy there?
It's pretty bold. They want to invest in startups that could change the game for the aviation industry and even beyond. We'll definitely have to unpack that more later.
I'm intrigued. So we've got IndiGo dealing with engine issues, rising costs, and tons of competition, but they're not just reacting, they're taking steps to strengthen their position here and abroad.
Exactly. And now let's dig a little deeper into their financials to see just how these challenges and strategies are playing out.
Sounds good. Let's dive into those numbers and see what we can find.
Their total income, like we said, hit 178 billion rupees. But it's interesting to see where it all came from.
Okay, give me the rundown. Did they get specific?
They did. A big chunk, about 169 billion, came from their main business.
Mm-hmm.
Passenger tickets, baggage fees, that sort of thing.
Mm-hmm.
But here's the interesting part. They also made 7.9 billion from other income.
Other income. Now that's interesting. What does that even mean for an airline?
Well, it could be a bunch of things, but for IndiGo, a lot of it came from compensation from their engine supplier, IAE, because of those supply chain issues we talked about.
Right, those grounded planes must have triggered some kind of clause.
Exactly, and it shows how IndiGo has been really smart about lessening the financial blow from all those grounded aircraft. This other income basically softens the hit to their profits.
So it's not just about their core business. They're finding ways to work around those problems and make money from unexpected places.
Now let's look at the other side, their expenses. This is where we really see the impact of all those operational headaches.
Okay, hit me with it. What were the biggest costs?
No surprise here. Aircraft fuel was a big one, 66 billion rupees. Fuel's always a big cost for airlines, and with prices all over the place lately, it's not unexpected.
Right, fuel is essential, but it can really drain their resources. Any other big cost increases?
There was one that really jumped out, aircraft and engine rentals. It shot up to 7.6 billion rupees, almost 3 times what they spent last year.
Triple. Wow, that's huge. I'm guessing that's because of those short-term leases they had to get to keep flying.
You got it.
Yep.
Those leases were necessary, but man, were they pricey. It's a tough spot. They had to keep the planes in the air, but it came at a cost.
It's a balancing act, keeping costs down, but also making sure they have enough planes.
And we can't forget about inflation. It's putting pressure on everything.
Right, inflation is like a slow burn, just chipping away at their profits. So it's not just the engines, it's a whole bunch of things driving up costs.
Exactly. And it's clear from what their CFO said on the call that they know this, and they're actively looking for ways to deal with it.
I'd love to know what they're thinking. Did they say anything specific?
They did. They're focusing on 2 things: finding efficiencies internally and exploring new revenue streams. On the cost side, they're renegotiating contracts, optimizing their flight schedules, even streamlining their onboard services.
That's smart. It's not just about cutting, but doing more with less.
Right. And for revenue, they're looking at ways to boost what they call ancillary revenue, like maybe offering more premium seating choices, expanding their baggage options, maybe even partnering with travel companies.
So thinking outside the box beyond just ticket sales.
Exactly. It's a more well-rounded approach to making money. This multi-pronged approach shows how adaptable they are and how committed they are to riding out this storm.
Now let's switch gears a bit. We talked about their financials, but I'm also interested in their people. We touched on their pilot training program, but did they say more about their overall workforce strategy?
They did. Their CEO, Peter Elbers, emphasized that investing in people is just as important as investing in planes and tech.
So it's not just about the hardware. They get that a skilled workforce is key.
Absolutely. Elbers talked about how they've implemented new training programs and procedures to improve efficiency and to help their staff handle unexpected situations.
Makes sense, especially with all the disruptions lately. It's like they're trying to build a more responsive and resilient workforce. Did they mention anything about encouraging innovation within the company?
They did. And this is where their venture capital arm comes in again. IndiGo Ventures. They see it as a way to tap into the startup world and find new ideas that could help both IndiGo and the whole industry.
That's interesting. So they're looking outside their own walls to see what's happening on the cutting edge.
Exactly. They're putting money into startups that are developing new technologies, exploring different business models, and tackling big challenges in aviation.
Like what kind of startups? Give me some examples.
It's a real mix. Some are focused on improving the customer experience through things like AI chatbots for customer service or personalized travel recommendations. Others are looking at sustainable aviation fuels, which could be huge. And some are developing advanced analytics platforms to make flight operations smoother and more efficient.
It's really cool to see an airline embracing the startup scene like this. It shows they're serious about innovating and staying ahead of the curve.
And it shows the potential of IndiGo Ventures to not just help IndiGo, but to really push the whole Indian aviation scene forward.
Now let's talk about the customer experience. What stood out to you in terms of their plans to make things better for passengers?
Launching that new business class product is a clear sign that they want to step up the premium travel game.
Okay, tell me more about it. What makes it so different?
They designed it with a wider range of travelers in mind, from those who fly business all the time to those who want to try it out. It's got better amenities, upgraded entertainment, and a more personalized service.
So they're upping the comfort and convenience for those who pay extra. What about economy class? Are they making any changes there?
While they haven't announced any big overhauls of economy, they are focused on using digital to improve the overall experience.
Right, we talked about their website and app. How exactly are they using digital to make things better?
They want to create a smooth and intuitive experience across all their digital platforms from booking to arrival. They're making it easier for passengers to manage their trips, get the info they need, and even pre-order meals and duty-free stuff.
So it's about giving passengers more control and flexibility. Anything specific that caught your eye?
They're adding a new fare calendar so you can easily compare prices across different dates and find the best deals. They're also adding real-time baggage tracking so you always know where your bags are.
Those are awesome. Anything that makes travel less stressful is a win in my book.
For sure.
Yep.
And they're looking into biometrics and self-service kiosks to speed up check-in and boarding.
It sounds like they're pulling out all the stops to make the whole journey better. But let's talk about their future plans. Given all the challenges in Q2, what are they expecting going forward?
Despite all the hurdles, they're actually pretty optimistic. Their CFO said they expect capacity additions to keep growing in the double digits for the rest of the fiscal year.
So more planes, more routes, more growth.
Exactly. They're banking on the continued demand for air travel in India, and they're confident they can grab a big piece of that growth. But of course, there are still challenges ahead.
Right, the engine problems, the fuel, costs, the competition. Did they talk about how they're going to handle all that?
They did. Their strategy is a balancing act, managing costs while also boosting revenue. On the cost side, they're all about improving efficiency, finding better ways to handle fuel costs and getting better deals with suppliers.
So squeezing every penny out of their operations.
Exactly. And for revenue, they want to expand their network strategically, targeting those busy routes and teaming up with other airlines to offer more connecting flight choices.
That's smart, diversifying their offerings and expanding their reach. It helps spread out the risk. But what about those engine problems? Are they going to keep causing trouble?
There's still an issue, but they expect things to get better soon. Their CEO said the number of grounded planes is already dropping, and they think it'll be in the mid-40s by the start of the next fiscal year.
Okay, so there's hope on the horizon, but it's still a big challenge. Did their leadership give any insight into how they plan to overcome this?
They've been really proactive about finding solutions. They've leased more aircraft to cover the gaps, and they're working closely with IAE to speed up repairs and deliveries. They've even looked at other engine options, and they might adjust their flight schedules to minimize the impact on passengers.
So a combination of short-term fixes and long-term solutions. They're not just sitting around waiting for the problem to go away.
Exactly.
Ooh.
It shows how resilient they are and how determined they are to get past this obstacle and stay on track for growth.
It's a great example of turning a challenge into a chance to innovate and come out even stronger.
Now let's shift gears a bit to something we haven't talked about yet. The steps IndiGo is taking to reduce the financial impact of those grounded planes.
Yeah, we talked about those payments from IAE, but it sounds like they have other plans too.
Well, they've been pretty clever about using some financial tools. Their filings actually mention something interesting about their tax strategy. They have something like 130 billion rupees in carry-forward losses.
I know we have some finance whizzes listening, but just in case, can you break down how those carry-forward losses work?
Sure, it's a pretty neat trick.
All right.
If a company loses money one year, they can use those losses to offset profits in the future, which lowers their taxes down the line.
So like a rainy day fund for their tax bill.
Exactly. It's especially useful in a crazy market like this. It helps them even out their tax payments over time.
Smart. So they're getting compensation from IAE. They're using those finance leases strategically. And now they're using these carry-forward losses to lower their taxes. It's a pretty multi-layered strategy.
It really shows how well they understand finance. They're not just reacting to the problem. They're using everything they can to minimize the damage and set themselves up for a strong comeback.
Makes you wonder, with their plans to keep growing and adding more planes, could they run into problems with airport capacity in India? I mean, places like Delhi and Mumbai are already packed.
You've hit on a key point. It's actually something their CEO, Peter Elbers, talked about. He pointed out these infrastructure limitations and said he's worried they could hold the airline back.
It's like a bottleneck. They can buy all the planes they want. But if they can't get slots at those busy airports, they can't grow.
Exactly. And it's not just IndiGo. It's the whole Indian aviation industry.
Seems like it'll take the airlines, airport authorities, and the government to work together to figure this out.
Absolutely. India's airports need to keep up with how fast the industry is growing. It's crucial for the whole sector to thrive in the long run.
This makes me think about IndiGo Ventures again. Could they maybe invest in startups that are developing new ways to deal with airport congestion, like AI-powered traffic management or better baggage handling systems?
Definitely a possibility. And it shows how Indigo Ventures could not only help Indigo, but also push the entire Indian aviation scene forward.
It's like they're thinking several moves ahead, not just for themselves, but for the whole industry.
Yeah. It's a very forward-thinking approach. They're not just playing the game, they're trying to change the rules.
So as we wrap up this deep dive into Indigo's second quarter, it's clear they're dealing with a lot of complexity and challenges, but they're doing it with a lot of resilience and smart thinking.
They're facing some strong headwinds for sure, but they're tackling them head on. And at the same time, they're setting the stage for future growth and innovation. They're coming up with creative solutions to deal with these external issues, and they're investing in areas that will set them up for success down the road.
And they're doing all this without forgetting what's important to them: affordability, efficiency, and keeping their customers happy. They're a company with a purpose, and it'll be interesting to see how they continue to change and shape Indian aviation.
Their story is a great reminder that even when things are tough, ambition and smart planning can lead to amazing things. They're not just reacting to the market, they're actively shaping it.
Well said. We hope you enjoyed this deep dive into Indigo's second quarter and their plans for the future. Keep exploring, keep learning, and as always, keep listening.